How should we be reading this data? What does it tell us? What's the instant analysis?
When you look at the report this month, and as you mentioned, we see the headline number come down, business activity is still growing month over month, however, down 4.7 percentage points, but it does indicate that we've had growth just at a slower rate as we are measuring that directional change month over month. New orders, strong. Does show us what's in the pipeline going forward.
Yeah, what are the new orders coming from? Where are they coming from? And is that a holiday bump?
It's a holiday bump for sure, and definitely when you look at the pullback in business activity, which is concerning, not so much when you look at the new orders that offsets that. And it does indicate that even though we've had a little bit of waning in demand based on the geopolitical situation going on right now and some of the strikes that have also impacted both sectors, more so on the manufacturing side, still things are looking good for the services sector going forward.
Talk to me about what's happening with employment. Now, clearly, this is a variable cost, and companies are going to manage this very carefully. They have struggled, though. You've been telling us for months that they've been struggling to hire the right people. Is that struggle still real for them, and how are they managing it?
Yeah, definitely. When you look at it's been ongoing, as you said, it's a continued trend. Mid-level managers as well as line-level workers in customer-facing positions, retail, accommodation, and food services, still having difficulty hiring people. And as you mentioned, variable expense is something in this labor-intensive market that companies continue to want to manage as demand is softened.
We talked about this with Secretary Sue, and we talked about the rise of black women unemployment, and that the pandemic child care relief program ended at the end of September. And I'm wondering if you've noticed any difference in women employed as that has all happened. And have your companies that you talk to or industries, have they mentioned this at all as a problem going forward?
It has not come up from our respondents, but we do know that companies are definitely trying to segue back into working in the office space versus companies that have operated virtually for the prior 3-4 years. So there is that trend. But as far as addressing the care at home care and things like that, has not come up from our respondents.
That's good.
Is this an economy, Anthony, is this an economy that you think still needs to slow down? You've talked about the fact that it is softening, but does it need more help? We're trying to debate whether or not the Fed needs to slow the economy down even further. Judging by your data, what would your advice be to Jay Powell?
A great question, but I think that, real estate, rental, and leasing, that industry is still impacted by the high interest rates, and those comments come in every single month from our respondents, as well as when you're looking at construction. It's a mixed bag in construction as well. Commercial, not so much. Residential, still soft. So the interest rates are impacting those two industries. And then when you throw in the whole geopolitical mess that we're experiencing right now, professional, scientific, technical services are number 3 contributor to GDP from the services sector. And pretty much everything in the Middle East has stopped for those companies.
Oh, wow. Okay. Would you still say that this is an economy that can do a soft landing?
Yes, I think that I know that Tim has mentioned on the manufacturing side, he feels that they've bottomed out. They're in the bottom of the tranche, and that hopefully that's the case. And services have been resilient and strong. And it's even though we've seen this pullback on the composite index, it still indicates growth month over month. So we're doing okay.